Journaling, in my own personal experience, from seeing students go from zero to knowing how to break down their currency pair and actually making a decent amount of consistent pips, is one of the main factors which have actually allowed them to do so. So what is journaling? Now, I mentioned this in prior videos, but we have to treat Forex trading, any trading, whether it be commodities, Forex, futures, stocks, CFDs, okay, as a business. So for instance, if you have a business out selling coffees on the street, every coffee you sell, that inventory, okay, you're logging what comes in, what goes out, what comes in, what goes out. Why do people not do this with their trades? All right. People think just because it's online, it's kind of like a virtual gambling game, and they get a little bit carried away. I'm sure many people can relate to that who are watching this video right now. So journaling, logging our trades in the professional, correct format and manner, which I'm going to go through and show exactly how to do now, it's something that's going to accelerate your learning curve if you're a newbie, and it's going to keep you on the right track and grounded if you have been in the game for more than a year or so, and you're actively involved in the charts every single day, for instance. So this is in the book as well. Now I'm on page 194 right now, so I've put some sections in the book about this, and I'm going to go through each individual component in the book too. So in the book, sorry, on my desktop through the spreadsheet and the before and after and the other material that I have. Now, let's go through it. So firstly, we have our charting checklist. So on page 195 and 196, I put this in just as a rough guideline. Because remember, guys, you have all of the online content and you also have the book content. And for those who know one-to-one, you have the content that we've gone through together there. So we need to put all of this together now in order to enhance your Forex trading, learning it, enhance your technical analysis, enhance your money management, enhance your risk reward, in order for you to make and extract money from the market. So this here, different steps. So number one, if you ever find yourself stagnant, which you shouldn't do, you really, really shouldn't do, because there's enough material here now for you to go through. You know what to go and look back at. So monthly main ranges, done that. Go to the weekly, go down to the daily, do your dailies and your 4 hours. Mark on your higher highs and looking at the structure there. Again, there's a video in depth on that. Do your trend lines, applying your fibs, and what to look for. Inside bar setup, 3-pin pattern formations, any of the other candlestick formations, and a few other tips there as well. So you are as good as your last trade is a extremely, extremely important quote. Why? Because in this market, you could have 10 great trades. You could have 10 great trades, okay? Which define your character up until you've taken and closed your last trade, which will be the 10th trade. Only when you start to fuck about, okay, and start to make errors and start to deviate from your trading plan, deviate from your journaling, deviate from your strategies and so forth, things can go downhill and you could have a losing streak. Now you're only as good as that losing streak, and now you need to improve. You need to look at what you have just done last. I've already mentioned this, but it can be extremely difficult sometimes to deal with a winning streak as it is a losing streak, because on a winning streak you'll get too ahead of yourself. I've experienced this and I've seen people's journals. I've had people's journals, I've seen the losing streaks, then they've gone back into a winning streak, and then gone back into a losing streak. Why? Because a losing streak is just as hard to maintain as a winning streak. You can get too confident, too ahead of yourself. Serotonin, dopamine, rushing through your mind, rushing through your brain. You now want to place another trade thinking you're too big for your boots. And at the end of the day, that is what is going to destroy you as a trader, is thinking you are too good for the market. You have now conquered it. You're at the top level. Again, market conditions can change overnight, next day, next trade even. So journaling and keeping up to date with every single trade, taking pride in your analysis, treating it as a form of art, enjoying it, and then the money is going to come secondary. Demo accounts, etc. We've gone over that prior. So I'm going to go through the spreadsheet and the before and afters, then I'm going to revert back to this page in the book. So firstly, right, here is the trading logbook. This is soon going to be embedded. It might be embedded now, depending on how far in you're watching this video, into the members area. But everybody would have received this as well on a USB stick or a WeTransfer file. So we don't have to go into too much detail with this. Right, the first one on this example, which everybody's received, is in fact an example in itself. Okay, so GBP USD. So first of all, we have the market. It could be a currency or it could be gold. GBP USD. Position long or short. Short sell, long buy. Contract size. So with the contract size side of things, this is going to be coming into the realm of MetaTrader. So 1.0 is equivalent to $10 or £10. 0.1 is equivalent to £1. 0.5 is equivalent to £5, and so on. Me personally, I only fill out the pip value. I just like to stick with the pip value, which could be £5 a pip, dollars, Canadian dollars, whichever base currency you are trading in. Date opened, I would say that's important. I would say it's more important than the time opened. The opening price, always have to put in the opening price there, so we know exactly where we've opened the trade. We don't always have to go to 5 decimals, by the way, guys. You can just stick to 4. I've already explained what that means in earlier videos. Risk reward is important. I'll get to that in a moment. But time closed, we don't really have to do that if you don't want to. But the date closed and date opened are more important than time. And but it really depends how deep you want to go with it all, because the time could be of some importance if you want to relate back to which session you actually entered the trade and which session you actually closed the trade in. Then you've got your stop loss level over here. You also have your target level, obviously your take profit level. And we're always looking at the stop loss and take profit potential target zone. It's not, when we put the risk reward tool on, so obviously our target level is going to be where we expect the market to go. But sometimes we'll have to close it a little bit early, okay? Now, pips achieved, that is obviously of some importance. The monetary value is also of some importance, but the pips achieved, pips are what we're going to be aiming for first and foremost. The duration of the trade, it could be 1 day, 2 days, 3 days. Risk reward is always important as well. Is it a 1-to-1, a 1-to-2, 1-to-3? The risk of deposit, that's always important because that ties into our money management section, and we're risking 1%, 2%, 3% of our accounts. Some traders have gone on to do 4 or 5. Depending on the balance, if they're actually okay with risking that, that's completely up to them. Anything over 5, I've already mentioned, is reckless. Profit or loss on the trade, have we won, have we lost? Profit, blah, blah, blah. And then commentary. Now, this is the funny part. I've seen some funny journals be sent back to me where I've seen, you know, this is up to you guys. This is for you to go in and type whatever you want. So here it hit target, hit stop loss. I sold it 3 hours before the ECB interest rate decision. I knew it before, but I still did it. So you can always revert, and you have to be honest with yourself with the journals. Being honest with yourself is going to get you very far in this market. Doing like 1 or 2 or 3 trades and fucking up and then erasing the whole thing and starting again is not being honest. We need to just stay on the right path. Now, staying on the right path will include, okay, the honesty, number 1. Number 2, having the mindset of being able to actually wait and say to yourself, okay, wait, will this trade I'm looking at now look good in my journal? Because we have to treat this as a piece of gold, a piece of art, where then you can maybe print it off at the end of the month, stick it on your wall, put it in a folder, and so you can see your progress month by month by month and see your growth. So in the case of this particular student, he was from London, he was doing a master's degree at the time. He was into the market 2 months before he came to see us, and he did the 1-to-1. He did the 1-to-1, and he went away 2 months, study, and then he started to trade. This particular segment of the block here on this logbook, was a £300 account, £300. So we always advise our students to go away. If you're new to the market and new to the charts, do not get tied up with trying to find trades, because you're just going to distract yourself. Get the quality of your analysis down first, then go into I would only really suggest demo if you have not actually placed any trades through your broker yet, so you want to get used to the platform as well. The secondary aspect is to go onto live account and put a small amount of money in, £300, £500, whatever you're comfortable with, so you can actually get a feel for everything, and you're going to take your trading to a more serious degree, a more serious level. You're going to take more care if you have even just a small live account. So this was £300, so you can see the monetary value of the trades: £10, £7, 28p, £3, £10, £7. Okay, but it's all about the pips. So some trades he's making 160 pips, 130 pips. Sorry, 160 pips minus 136.1. This guy has been very, very precise in the way he's actually put his logbook and journal together. I'm very, very impressed. But what's important here, guys, is this: the absolute final pip count. He's done 8 trades in the space of a month. I said he's doing a master's degree. He very, very busy. He was putting his trades on. He was leaving his trades to run, having confidence in his trades and analysis. And at the end of the month, 400 pips, or 434 pips. Even 100 pips on a even 50 pips on a consistent weekly basis could make you an extra average salary over here in the UK if you had the correct capital. So we made £35 on £300 account, which is just over 10%. So if we look at the pips, 434 pips, 10% growth. He then had more confidence to top his account up to £1,000 the next month. So as you can see, his wins and losses are a little bit bigger here. Okay, again he was up 346 pips. Over here he was up £119, which is again another 10% gain. So he was up 10% one month, 10% the next month. He's up nearly 800 pips in 2 months, and that was November and that was December. He stayed very, very consistent with all of his logs, all of his journals, profit and loss, honest with himself, all of his commentaries in there. And the next month he actually topped up his account up to £5,000. £5,000. All right, so I didn't actually, as you can see, his first trade's in there, 100 quid, 106 pounds, sorry. But I haven't actually gone back to him. But he hasn't reached out to us. Some students don't. Some students like to keep all of this private. But since then, I haven't spoke to him. I don't know how he's getting on. It's been about 2-3 months now since. So I'm probably going to reach out to him soon, just to see how his trading's getting on. But as I say, some people like to keep it private. Some people like to share their work and ask for more help and more assistance and so on. It all comes down to personal preference. But this, guys, please, 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 when you are going to take trading seriously, this is the way to do it. Logbook. Secondary to the logbook, as I'm going on, we have the before and after example here, which again is on the AstroFX student thing, USB, sorry. But now it's here for everybody to look through. So, right, what we have is every trade he's placed in his logbook. So GBP first, Euro JPY second. He has also done, oops, sorry, going all over the place here. He has also done his before and after. So there's his first trade, second trade. So let's just zoom in a little bit. Firstly, this is his Euro JPY, well, sorry. Firstly, this is his GBP USD. He's got his fibs on there, his key levels, he's got his risk reward tool on there, which is going to be an absolute must for every single trade setup you you go through. Put your risk reward tool on there. This is how you do it properly. He's got his risk reward tool on there. He has his A, B, C Fibonacci after 38.2. He's made a few notes here, if you can see. So what has he got? He's got lower high, a new lower low is expected. Shooting star after 38.2 fibs, so he's taking his candlesticks into consideration. Break and retest of the outer trend line, which is this one going across here, which is probably a daily trend line. And wait for the MAs to cross. So he's waiting for all of that. And here's his aftershock. Boom, he's entered the trade, and look at the accuracy of that Fibonacci target, where his target is. Pinned his target by 1 or 2 pips. Boom, he's out the trade. He's logged the trade. In here, there's a GBP USD. He's made 161 pips off that trade. Hit target, boom, his target's done. That's it. So he's done this, guys, before, after, screenshot. On the Mac, if you've got a MacBook, to do a screenshot, it is Shift, Command, and 4. Okay, and it comes up with this little thing, as you can see. And then you get to select where you want to screenshot. So if that's then gone onto my desktop, so that's the screenshot I've just taken. You will then go in, modify it, name it, and then you can save it, put it onto a Word document. For those who are using a Windows laptop, in your search bar, instead of you doing a standard print screen, there's something called the Snip tool, S-N-I-P tool, Snip tool. If you search that on your Windows laptop, you can pin that to your taskbar afterwards, and you click the Snip tool, and it basically allows you to select an area in which you want to go and screenshot. Okay, so if you guys want to use that, anybody on Windows, again, it's all about organization, and I tell everybody this who comes to do the one-to-one course as well. But anyway, scrolling through here, there's this before and after. Even if you lose a trade, put it in. You've done a transaction, it's not worked out, you need to go back and review it. So there's the trades. Before, after, target hit. Knowing why you've entered the trade. You cannot keep all of this information in your head, especially when you're starting out. Before, after. So that's that. That's the screenshot technique. That's the logbook there, okay? And last but not least, we also have another way of, I think I've closed it down. No, it's not. This is another student's work, because again, people have their own ways of doing it. So this is just one sheet. So the prior student I've just showed you, just put it on a standard Word document. I also recommend under the screenshots that you do on the Word document, just type something about the trade. Type why you entered the trade, a little bit more information, further information. Now, here, this is for every single trade you do, you can maybe work something out like this. So this is one piece of paper, or one Word document. Your date, when you entered the trade, reasons for entry, lessons learned from the trade, how much money your pips and accounts, percentage growth or loss you made on the trade, because then that's important. Daily overview, you could do a daily shot or a weekly shot, daily shot, 4-hour shot, and so on. This is just an example of a layout. That's all I'm trying to get across here. Because it's completely up to you guys exactly how you want to do it. But every trade, before you enter, make sure you do your annotations on the chart, screenshot, know why you're entering the trade, put your trade into the journal, and then come back to the trade afterwards. You should only really be doing about 8 to 12 trades a month, to be honest, using our techniques and strategies. So try not to go overboard as well. Now back to the book on page 197. Once you have an archive of, let's say, 6 weeks trading, let's say maybe you have 6 weeks trading or 20 to 30 trades to look back at. So you've got your befores and afters, you've got your spreadsheet. What you then need to go and do with your currency pairs, because obviously we only look at 5 currency pairs after effects. You can go and look at as many as you want. I don't really advise doing too many, that's completely up to you. So this is what you need to ask yourself afterwards. Go through your work. We call this post-mortem analysis. What currency pairs am I performing best with? Which ones do I need to keep? What time of the day or what time of the week am I most profitable? What periods of time am I losing streak? So these questions you need to go ahead and ask yourself. So this is in the book, so you can refer back to the AstroFX guidebook for this. All of these, again, are important. Befores, afters, a little bit more information there. Some more screenshots in the book. A little bit about the journal in itself there is in the book as well. Self-control assessment, mistakes. Common mistakes are big volume sizes, taking chunks out of your account, moving stop losses, entering too many trades at once, and so on. You and only you are in control of your actions within the market. So yeah, you can go ahead and read this, guys. You can go ahead and read this. But trust me, this is going to keep you on the right path. Going to keep you on the right path. Knowing why you've entered the trade, being professional about it. And once you've got an archive of 6+ months and you're making even just steady gains and you can trust yourself with the money, if anybody's looking for investment opportunities, investors will come to you. This is how you're going to get investment if you are going to go down that route. Everyone goes down their own different routes, but I'm just giving you some advice, putting some advice out there. You can have your befores and afters, all of your wins and losses on your live account, and you have your base there to go and show people that you are a trader. somebody can trust you with capital. Okay. So concluding, how many times a day will I check the market? So this is going into like routine as well. So once you've built your journal, you can then scuffle around and build your routine and be a better version of yourself. Trading is not a race, there's no finish line. Consistency, experience, and you have to just, compare it to other investments out there as well, guys. So that's the art of journaling. I'm not going to rant on anymore. I hope you enjoyed this video. This is a motivating preach in order for you to journal your work. And in 6 months' time, just keep hitting it consistent. Journal all of your work. Look back and you're going to reprogram your subconscious mind in order to know about all of the trade setups, all of the strategies, have some routine, have some structure, know when is the best time to trade, what days are the best time to trade. And again, with all of this, please look at the fundamentals and just try to stay away from the main news. And also log how fundamentals and news have actually impacted the market. Okay, so I hope you enjoyed this video. Thank you very much.